Okay, everybody, it's part two of the video. I'm going to look at Pan American Silver next. I thought today, I was looking at Pan American Silver as it made a higher high on the move. I was thinking that today was going to be the day that that someone was going to pay the piper. So, but as it turns out, it was still a low volume day. It was a little higher than the last couple of days. We went up and we touched the top Bollinger Band, which I'm going to show right now on the daily chart. This chart is very interesting. As you see here, we touched the top Bollinger Band. These Bollinger Bands are converging at a rate that I haven't seen in this stock in the last 3 years. The Bollinger Bands, you see how much they came in over this period, basically because you had a long period of churning here, and I think you were building a bullish base there. And now you have a close above the 45 day for the first time, and you have two closes in a row above the 18. And really, if you take out the Monday's downside, you really have I think it would be a week above the 18 day. So the 18 days is starting to turn up. You have the lower Bollinger Band is coming up, and the top one already came down and met Pan American Silver at the day's highs, or very close to it. The top Bollinger Band is 25.99. The high of the day is 25.97. You don't have very big volume. As you can see here, the volume bars have been very low, but it was a little bit higher than the previous 3 sessions, actually. So it's a good sign that there was a little bit of volume, but in order to break this Bollinger Band and really spread it apart, you're going to need some big volume, and it's going to come into this market. There is going to be a big move. I anticipate that it's going to be to the upside, because I'm seeing a lot of positive things in silver, gold, negative things in the dollar, and in this stock too. You're seeing some good accumulation patterns. If you look down here, you do have a bullish cross now on the MACD, and the histogram is still ticking up. You have a stochastic reading that is in the 70s, so it is getting a little bit overbought at this time. But in general, I think it looks bullish, and this pattern is suggesting that once it's broken to the upside, we should go to 28 and test the old highs. And I think we should be able to take them out. And if you look at Pan American Silver on the weekly, okay, and if you see here on the weekly, you can also see that the lower Bollinger Band is coming up. You're above all the key moving averages. Last week, the body closed outside of the body of the previous week. In this candle, you're making a higher high also, which is very bullish. You have a stochastic reading of 49.95 and 50, and see it's turning up here. And like I said, when it only comes down halfway and it turns back up, it usually means that you're going to enter a very bullish phase. And this week, if you get some upside and you wind up breaking the previous highs of 28 or coming very close to it, you should have that stochastic turn up and cross, and that's going to set up for some very bullish activity over the next few weeks in this market. And that's exactly what I'm looking to happen, is the dollar breaks down, and as gold and silver rise, gold makes new highs, silver takes out that 1950 or so resistance and breaks the inverse head and shoulders that I've talked about in other videos, and it looks very good at this moment. Okay. Next, I'm going to just going to briefly go over the SPY, because in previous markets I did say I was bearish before, and I caught this move down. I was short at like 12, 10 or so up here, and I rode this thing all the way down to I actually bought puts on SPY. I went up taking out when SPY was in the 107s. I wanted to. My target was originally 105, and that was hit, but I wound up taking out because I took out the day before options expiration in May. I did not want to get caught with with one of those big gap up type scenarios. So I was happy to take the profit and head to the sidelines and wait for another opportunity, and that's when I got involved in the Pan American Silver, buying calls on that, buying calls in SLV, and buying calls in GLD. As you see here on the SPX, you do have a double bottom, and you have a double bottom right here. See, this is the first bottom, second bottom here, so it tested and held. And the double bottom is confirmed when this point is broken. You broke that, so basically the target is the difference between this rally point and the bottom area. So you have 10. So you take 1040, subtract it from approximately 1105, and that's your target, and it's 65 points of upside, which would bring you to 1165, which could also, as I pull this back, could also form your right shoulder. As you see here, I said there might be a head and shoulders formation that comes into play. Here's your left shoulder, here's your head, 1165. So you could have a rally over the next couple weeks, and then a rally in the euro, a rally in Canadian dollar, commodities, and you could wind up peaking over here, and then the market could come back down and take out this would-be neckline over here at 1040, and then when it crashed through, the target for the downside, you would take 1040, subtract it from 1220, gives you 180 points of downside from 1040. So that would be a decent amount of downside there. Would put you into the 800s. So that's what we have to look forward to potentially. That's one scenario. Now it doesn't have to form a head and shoulders, but it's just very at the 1165 area. I would be very cautious. Now I am not day trading per se. A lot of these markets, a lot of my trades are more. I'm trying to catch like a decent move. Whether it happens in a week, 2 weeks, 3 weeks. I'm trying to catch the intermediate term trend move. If you want to day trade the markets, I mean, you want to look more at the hourlies. You want to look at the 15 minutes. I mean, generally you want to look at that anyway, just because you want to make sure that support lines are being held. You want to see how the divergences are setting up and stuff like that. It's very good to look at all different time frames. But just to let you know, I would be bullish up until 1165. Of course, it doesn't have to get there, but it should wind up hitting that target. Whether it'll do it in a few sessions or whether it'll take 2 weeks, that remains to be seen. But you want to be cautious in this market because there's a lot of bad fundamental data coming out. The home sales have been horrible. The retail sales have been bad. The jobs data has been very disappointing. You still got all these problems with Europe. United States is in a big mess. Our economy. You got the big oil wreck off the Gulf. I mean, there's a ton of potential bad news, but at the same time, the fear levels are very high. Like if you looked at the 10-day arms index, I mean, it's at one of the highest points in history, which means that people are just willing to sell at any price recently. So there's a lot of fear in the markets. We all know that the governments are going to print a lot of money, so you have to be. It's not as simple as the economy's craps and the market's going to go down. Doesn't necessarily mean that. You have to be very careful, and you have to respect the printing machine, which can, in the near term, it can make the market irrational for a lot longer than you can remain solvent. That's a good quote to take with you, and always remember, and always have a plan for your trades, for when it works out, and also for when it doesn't work out. So then you're prepared, and prepare yourself for the worst. All right, have a good day, everybody. I'm getting a little tired here, so this is going to be it for me tonight. But I'm going to try to do 2 again tomorrow. So have a good one, and look out for that 1165 area, and let's look at gold to make some new highs soon. Right? Have a good one.